To start off, I would like to invite our moderator on stage for the panel discussion. He has been trading and investing in the Philippine market since 2009 and has been with COL for over a decade, most recently as the head of product for our private clients group. Currently, he is the portfolio manager at our asset management company, COL Investment Management, where he is responsible for implementing fund strategies and managing fund portfolios. Let us all welcome Mr. Zerge Zandueta. Joining Zerge are our pool of experts. First, we have COL's Chief Customer Experience Officer and First Vice President of Sales and Customer Support. He manages the day-to-day operations of COL's business centers, its sales division, as well as its customer service division. He also spearheads the COL Investor Seminar Series, the flagship investor education program of COL. He has decades of experience in trading the markets and is a consistent recipient of the Best Technical Analyst Award by the Fund Managers Association of the Philippines. Let's all welcome COL's Chief Technical Analyst, Mr. Juanis Barredo. Next, we have COL's First Vice President for Corporate Strategy and Investor Relations in 2020, she was voted as Best Strategist by the Fund Managers Association of the Philippines. She also used to head COL's research team, which covers more than 60% of the total market capitalization of the Philippine Stock Exchange. Outside of her work at COL Financial, April writes a weekly column named Intelligent Investing for the Philippine Daily Inquirer and hosts the TV show Insight with April Litan for ANC. She is an active member of the Chartered Financial Analyst Society of the Philippines and headed the society's Investment Research Challenge Committee for 11 years. She was also the society's president from 2009 to 2016, wherein CFA Philippines won several Society Excellence Awards, including the Most Outstanding Society for its size. Ladies and gentlemen, let's welcome COL's Chief Equity Strategist, Ms. April Lynn Tan. Moving on, we have the President and CIO of COL Investment Management, COL's own asset management company. He is also COL's portfolio management expert and launched COL Fund Source, the country's first mutual fund and UITF supermarket. He is a veteran fund manager with over 30 years of fund management experience and previously managed the Philippines' largest trust fund with assets over 700 billion pesos. Let's welcome Mr. Marvin Fausto. And last but definitely not the least, we have the founder and chairman of the board of COL, COL Securities Hong Kong, CTS Global Equity Group, K-Loom Trading Institute, and COL Investment Management. He is a veteran in the industry of stock investing and equities trading with over 40 years of experience dealing with multiple global markets, namely the US, China, Japan, Indonesia, and of course, what he considers one of the strongest emerging markets today, the Philippines. Let's all welcome Mr. Edward Lee. So let me turn you over to Zerge. Zerge, take it away.
All right. I hope all of you guys can hear me well. Okay. So, good morning. After 3 years of being stuck in the pandemic, finally, we're able to see face-to-face. You know, going here, actually was scrolling through my Facebook feed, and I saw several friends like post pictures being in a conference, and then a tagline that they put there actually struck me, and I realized parang, oh nga no, what they put there, they said, iba pa rin talaga ang face-to-face. And I hope that's something all of you guys here are feeling. I mean, it's good to be around like-minded people and to learn about the markets. So I know it's not easy to wake up on a Saturday morning, yet all of you guys are here. So thank you for your attendance. So again, my name is Zerge Zandueta. So I'm a fund manager for CMI, so that's COL Investment Management Inc. I've been with COL for 11 years, and just like many of you today, I'm still learning a lot about markets, and I'm very excited to hear about what our panelists will say. So I guess just to get the ball rolling, let me just set the stage here. So, I mean, at least our panel, the past 4 weeks, I mean, if you ask me, has been a bit of a head scratcher. So, if you've been following markets, like let's say, over the course of the past quarter, all you've heard were the bearish chatter. Like, there's going to be a recession this year in the US. Of course, China, COVID cases, are they gonna lift the lockdowns or whatnot? Inflation is still high, interest rates are high. There's an energy crisis in Europe. So things were shaping out to be a bit bearish for this year. And yet, the first 3 to 4 weeks, we've seen markets rally and rally considerably. So the PSEI, for the first 3 or 4 weeks of the year, it's up 8%. And mind you, the local index, it hasn't had a positive year in over 3 years. So right now, at least it looks like we're trending positively. Hopefully, we could end the year on a positive note. But yun na nga, di ba? Very bearish at the end of last year, but now it's up. So, I mean, what's going on? So perhaps I could start here with Boss Edward. Given your background in global markets, maybe you could give us your thoughts on what's going on.
Hi, good morning, everybody. It's good to see you. I always advocate face to face. Now, this is basically who we are. Anyway, let me share with you one or two slides. The problem is after I share it, baka uwi na tayo eh. No? So can you put it up now? All right. So I think this is the most important chart for most of you. I presume you're more active investors rather than that's the reason why you're here. That means you're participating in the market day in, day out. You're looking at opportunities, how to take advantage of market volatility. You know. But if you look at the chart on the left side, the most important is there are 4 stages of markets. You know. So there's an accumulation stage, there is an advancing stage, there's a distribution stage, and there's a declining stage. And we've been talking about this for so many years. The sad part is, of course, it takes a while for people really to understand what it's all about. So in one slide, and I think I get this talk, I think 2018, 2019, it's all about the 10-year US Treasury. So because that's the biggest funds flow, depending on the strength of the US dollar, the weakness of the US dollar, what the 10-year is basically pricing in. So from the right side, you see basically the different stages. So in a nutshell, we believe that we're transitioning from stage 1 and we're going to stage 2. If you don't understand the slide, I think we're in the beginning of stage 2. The sad part is the beginning of stage 2. The bottom is the 10-year US Treasury. So it peaked in about 4.3, 4.4, about October. And then it started moving down from 4 point something down to 3.5. So that's the reason why we rallied. The whole market rallied is mainly because of that interest rates. Uwi na tayo? That's it. All right, thank you.
Thanks, Boss. So when you say it's already stage 2, would you say?
We are transitioning. Because we had the stage 4, which is the pandemic that created the crash, right? So we consider that as a stage 4. And the rally that we've seen from 2020 to where we are the last 3 years, it's stage 1 because valuations are very reasonable. The interest rates are high, so a lot of people move out from equities to fixed income product, right? The bonds, the yields have gone up, so a lot of I think our guest here from Sun Life basically created a product that basically guaranteed 4.5. Is it 4.5? 4.5%? To a guaranteed 5 years, I think that's a product. So a lot of movement going to the bond market. Yeah.
All right, great. So it looks like at least markets are rallying because interest rates are going down. And things look very constructive at the moment. And I think everyone in the audience is probably familiar with that quote that Sir John Templeton popularized. So if you could just flash it on the screen.
So in a stage 2 environment, it's called, we're growing on skepticism. What is this skepticism? It's mainly because the headwinds are there. There's so much headwinds. You're talking about, there's a recession, there's so many, at least the FANG, the big tech basically are cutting down people 5 to 10%. So you're seeing a lot of this news coming out. The beauty about it gaps down and then rally, gaps down and rally. So what we're seeing is that it's pricing in already, at least for now. It's pricing in for now. When we talk about systemic risks, we talk about there is a problem in the banking sector. But today, in the 1990s, the Asian crisis, there's a systemic risk. In the 2008, 2009, during a global crisis, it's a systemic risk. But today, most of the banks are making a lot of money. So normally, and I've said this so many times in our talk, it's about 25 to 30%. So we've seen the 25, 30%. Now, we're seeing the rallies, but then, of course, kung alam ko lang, mayaman na ako. Hindi ko alam yan. But the probability is that we're basically transitioning, at least the Philippines is transitioning from stage 1, the beginning of stage 2. So because of the strength of the peso, it's really dollar correlation lang yan. So if interest rate starts coming down, which we haven't seen it now. So the headwinds is basically the pricing in of it's not the 10-year is just still there, right? In the US.
All right. Thank you, boss. Actually, that's the next area that I want to at least drill down a bit more on. So Boss Edward mentions that we're probably entering or about transitioning into a stage 2 phase in the market wherein you see prices practically move from the bottom portion of the chart towards the upper right portion of the chart. So things could be shaping up a bit more bullishly, but I guess, with that quote of Mr. Templeton there, he mentions that bull markets are born during pessimistic environments. And I guess my question, and I guess I'll direct this now to April. So are we in the middle of that pessimistic environment where a new bull market is born? Or is the pessimism justified? So from what you see in the fundamental landscape, are there any particular risks that we should really be looking out for?
Okay, so I think alam na ng mga tao yung sagot yung sumusunod sa mga columns ko. I mean, I kind of write about the risks facing the market, and I think the biggest risk is more global or more US rather than Philippines because there are concerns, valid concerns that the US would fall into the economy would fall into a hard landing. Okay, because right now what the market is pricing in is that the Fed is very hawkish, and yet they don't believe the Fed will continue to raise rates, and that the economy is doing well. For example, consensus forecast on US GDP growth is 0.5% for 2023. What if, first of all, you have two scenarios. The first is the market is correct, that the economy does not fall into a hard landing. It successfully, or the Fed successfully orchestrates a soft landing of the US economy. So the big question is, that said, will the Fed actually pivot? And the market is expecting a pivot, clearly, because bond rates are going down, and the implied rate of the market is that, pivot by second half of 2023. Baka ma-disappoint yung market at tumaas ang interest rate and mag-strengthen ulit yung dollar, which is one of our drivers in so that's a threat. The second possibility is that there is a hard landing. Okay, so what if there is a hard landing? Well, of course, you'll see the pivot because there's a hard landing. But of course, if you see the hard landing, that's not good for stocks, right? And US stocks are still expensive. I think the biggest question that we don't know yet right now is, will there be a decoupling of US and Philippines and EMs, no? So for me, that's the major risk. I think Philippines, yes, I agree, we're stage 1 entering or transitioning to stage 2, but I feel that the US is still in stage 1. So yun yung tanong ko, kung ba ang US, sasama ba tayo? Parang 2008 yan when the US fell significantly, di ba? We were also dragged even though we didn't have problems, which is why I'm a little bit more cautious.
Do you feel, April, that there's anything unique about the Philippines that could that even if the US does undergo a hard landing, that we could still see that stage to advance? Like, do we have
Yeah.
any unique
I
characteristics?
think what's different this time around, although of course people would caution against using the this time it's different kasi everybody says that. But what is kind of different this time around is in the past, when we talk about the Philippine story, the EM story, investors always had an alternative like, wow, but I like the tech story of the US better. It's sexier, more attractive, and parang maganda parating kwento dun. Pero this time around, it's more like, yeah, EM has this, has that. Yeah, we know they have long-term issues, but well, that market's cheaper right now, and they're relatively stronger. So well, it's not so great, but it's better than the US because if anybody you talk to is like scared of the US, and talk to any fund manager right now, they're gonna say the consensus call is buy EMs. Everybody says that. This is the first time in my life I've seen that. Everybody says buy EM. And Philippines is going to benefit from the flow to EMs.
All right. Actually, I've been reading a lot about that also. Like the general consensus, at least in a lot of US brokerages, they're telling their investors to invest out of the US and go into EM. I guess my follow-up question to that, especially as it pertains to the Philippines, is that the past few years, you've seen the allocation of the Philippines in the emerging market basket actually shrink. And now, the call is to go EM, but the Philippine weighting has actually shrunk. So do you think we will still benefit in the same magnitude that we did, like let's say during the Pinoy years when you saw a lot of fund flows to the Philippines? Well, what do you think? How about boss?
I hope there's no politician here, but and I think it's really very important that that's one of the reasons why COLs was created, was really to educate the investing public, to have more exposure in investing in a lot of businesses here locally. And really, it's really more government, right? Their policy towards how they attract foreign investing, for investments. So you can see that I really agree with you that it will continue to shrink. As countries basically expand, if we still in the same environment, I've been in the industry since '86. That's almost 40 plus years, right? And we still have the same 200 companies in the Philippines. So I think the answer is from 2, 3 down to 1, down to 0.6, 0.2 na lang. That's the problem. So we're trying to do our job, right? We've been doing it for so many years already. And really to educate as many Filipinos. And now we have a project basically to work with the small and medium enterprise and encouraging them to start strengthening their balance sheet and teach them how to list their company. So we have another role to play. There are two roles that we played. The first 17 years was education. The second is try to work with small and medium enterprise, which are being neglected from the big underwriters. They want really to do it. And we're encouraging people to get themselves, strengthen their balance sheets, strengthen their structure, their businesses, and try to scale up and raise money. So that's the next, hopefully, buhay pa ako, next 10 years.
All right. Yeah, thanks for that, boss. At least at the first maybe 3 or 4 weeks of the year, at least we're seeing net foreign buying actually come in the market. So I guess the hope, maybe it sustains. Yes.
Can I slow a slide on that emerging market? So this is January 9. I send a note to some of my clients, and it's the first time after 2 years that the emerging markets started to reverse. So yeah, this one. The one on the right side is EEM. EEM. So this is for 2 years. It's a 2-year chart. It has gone down consistently. Today, we've seen the beginning of a reversal. The sad part is in the stock market is that when prices are overbought, then pag binili mo, di ba? Baka bumaba. So a lot of questions. No? But That's the reason why the market went up, was because of, it's the first time it reversed out of more than 2 years of going down. So we believe that it's the beginning of stage 2, at least for the EEM. Umpisa na, nag-reverse na. So a lot of headwinds, right? So might be profit taking, whatever. But then tingin ko packet na yan. It's the first time. The US basically is still in stage 4, transitioning to stage 1. So what April is saying is correct. If it becomes a hard landing, yung stage 1 continue to be, yung stage 4 transitions to stage 1 sa US. So tuloy-tuloy pa rin, still considered as stage 4. No? So that's the difference. Now, if these things becomes a what you call soft landing, and then with all the cut of everything, the balance sheet basically went low, then automatically, hopefully, then wait for the earnings to catch up. So stage 1 sa tingin ko. Transitioning naman in the US as stage 4 going to stage 1. Going to stage 1. Kasi mahal eh. That's why, di ba? So may alanganin pa tayo whether it's going to be stage 1, di ba? But with the cutting down of slowing down they're not expanding, they're cutting all over the world. Now the nice part about this is that I've talked to some of the expat. They're expanding their businesses here in the Philippines. They're cutting everywhere except the Philippines. Nag-i-increase yun, the number of seats nag-i-increase siya. So that's the beauty about the Philippines.
All right, thanks, boss. At least now that we're in the topic of charting, as it's been flashed there. All right, so may I go now to Juanis? What do you think the charts are telling us at this point?
All right. Again, good morning to everybody, and nice to see you all again, especially now in better times. With regards to my perspective of the market, I'll, if I may, call up my deck that I did yesterday, so I can just quickly summarize an outlook for you. Next, please. So I guess we'll start off because earlier they were all saying that yes, a market is trying to be able to recover, and I guess the question we're asking ourselves is, what has the market priced in? In other words, why did the market rally? And so you would see a number of points up there that I've managed to be able to talk about. Slowing US inflation is one of them. The pullback in bond yields, because normally that is a leading indicator. And we've also seen the dollar come off its highs, and that allowed the peso also to be able to make a recovery. And of course, the big question really is the threat of recession. And many seem to be incorporating only a soft landing in a situation, and what they've not incorporated is what happens if what April is saying could come true. Then they're going to have to account for that later on. And so what did markets do in response? They rallied, right? If you notice emerging markets, the chart you see in the lower right, the EEM, that's the emerging market index, rallied, broke out of a downtrend line. The PCI broke out of a downtrend line. The US seems to be breaking out of a downtrend line right now also with the S&P 500, but not as clear as the other two. And that's where, yes, I agree with what they're saying. The US is lagging, and perhaps because there's still some things that have to be accounted for. Next slide, please. If you were to look for further proof, you will see here the charts of Germany, Japan, Thailand, and China. These are the iShares chart. I'm using this so that the dollar volatility doesn't cause changes in the valuations for each of these. If you were to look at them, downtrend lines broken. They even did something called a golden cross in technical analysis. That's when the 50-day moving average climbs over the 200-day moving average. That's supposed to be a bullish signal. And although it is a lagging signal, that means it will only happen after quite a bit of an up move has already taken place. So by this time, the confirmation is not really so necessary anymore. It's telling you, nandiyan na talaga. The reversal is there. And so, next slide, please. And so we have to ask ourselves, what is not priced in the market yet? Because this could cause corrective volatility in case we do see it. And when we say what's not yet priced in, we're going to look at it on the negatives and on the positives, okay? So on the negatives, it's quite possible inflation could stay high longer than what we want it to be. It could also be possible that because of that you might see bond yields rally because it's fallen down quite sharply. The dollar might do the same if we do see a rally in yields as well. And of course, the hard landing scenario, that could be a potential that is also out there. And who knows, there could be added war drama out there as well, which we don't know. I mean, we live with that risk every day. But you would see on the bottom two charts, this is what I would feel that if you see a rally in yields or if you see a rally in the dollar, I view it will only be temporary. So I don't feel that would be or take on a lasting impact to markets in terms of any correction. It might correct. It's timely to do it. I will show you in a little while, maybe into the next couple of months. But after that, I think, like Edward pointed out, I think the market will come back quite cleanly towards the latter portion of the year. What did the market not price in terms of the positives? Well, it could be possible that they could pivot and start stopping raising rates or maybe even bring it down if we're lucky. If we're lucky, no US recession or incredibly mild one. China reopening stronger than what we'd expect or faster. And of course, who knows, there could be a resolution to the conflict we've been seeing around the world. And any one of these things come out and that could be a catalyst for the market to even rally much faster. Next slide, please. For those who are concerned about the peso, my God, I was listening to all sorts of forecasts of where the peso will devalue to late last year, and it stopped after all those projections were coming out, and we saw that the dollar fell down and automatically the peso adjusted very quickly. But it's now at an area of support and at about 52.40, 52.30, 52.20 in that range. As long as we don't see a break of that, then maybe we can see some stability into the peso. So it's a critical junction right now. You can see there in the picture that you're at major support, and we're going to see what decision it makes. But remember what I said, even if you see a rebound here, I feel it will be temporary. So just a sidetrack movement. It'll probably flatten off after that. Next, please. And so in considering the biggest market in the world, which is in the S&P 500, this is the reason why things are still quite iffy. If you look at the chart on top, you will see the S&P today. And the chart in the bottom is a chart reference I used where the dot-com bubble came out back many years ago. And I'm kind of using that outline as potential what the US can follow. And if it can break through that downtrend line and stay above and even make a golden cross substantially, and we might be able to see things rally even more. So that will be quite helpful. In the Philippines, next slide, please. This is what I feel. And many of you probably have seen this slide into my tech spotlight recently because I've been putting it out there for quite a while right now. And so what I'm looking for over here is that we are a bit in an overstretched situation in the Philippines with the 7,100, 7,200 being the next resistance zone. I mean, I wish it can push up a little bit more. I mean, if we're lucky, maybe 7,475. But I really feel that the market will have to correct because we are overextended and overbought. And the kind of correction I'm looking at would be a zigzag like you see there on top, where it'll pull back, hopefully with a maximum range of about 6.5, 6.4, and then after that flatten off and try to be able to make a recovery already after that. And the template for that you can see in the lower part, which is an example of PSEI back in 2019 to 2020. But I think many of you probably have seen that if you guys are following the tech spotlight. Next slide. Where are we on the reversals of all this? If some of you would know your Elliott wave, I think we've finished wave 5. That means on a bearish wave, there are normally 5 waves down. So now it's rally time. And this recovery phase is quite clear. Last time I met you in September, I forecasted that what you see there on the left side, and it did the second one, the red one, and we saw the market rally very quickly. So the ending of a bear market tells you we're in a new cycle. And so we have to be able to position ourselves accordingly with that new prospect. One final one, please. Now, of course, nice to hear that, but let's just take things one step at a time. And the reason I would say this is because if you were to look at seasonal matters here in the index, you would see that January is seasonally a very strong month for the Philippine PSEI. But if you were to look at the next 2 months there, you see there the chart on the right, you will notice Feb and March averages are very, very low in terms of spitting out gains. And these are usually good periods to be able to work in corrections into the market. So after this rush, like I said, hopefully there's a little bit more, but please be prepared that we need to make a correction any moment now, and that don't get scared of it, just be prepared. And after this correction, you're going to have your chance to be able to ride back on this horse. So I hope that everybody sees this and shares, of course, our optimistic view that the markets will have something for us moving down the road in 2023. Thank you.
All right, great. Thank you so much for that, Juanis, that condensed technical outlook. I guess like just for me, as a follow-up question to that, I mean, it's very interesting that you flashed the golden cross. My question is how durable really is that signal and how reliable is it? Is it a chance that the market fakes us out at this point? So like right now, you've seen the cross, you think things are reversing and looking okay, but based on your experience, like maybe you could just give a probability. Is there still a good chance that market actually retraces back lower instead of just moving on higher from here? So we understand in the short term, there could be some volatility because markets are overbought. But like, what about the longer term picture?
I can't say there's no chance for the market to fall back. There could be, but I doubt it. When I've seen these golden crosses, then the worst that I would probably see is that they would flatten rather than just go up straight. And that might just take a longer period of time of recovery rather than move. But for the index to go back to our previous low, most likely not. So I feel fairly strong about that.
Wow, so you guys heard it. For me, that's something that's at least very encouraging in terms of how markets are shaping up this year. So I think at least things are looking a bit bullish. So maybe I just actually would like to go to Sir Marvin now. So you haven't spoken yet, sir. So I mean, just given everything that's already been laid out, is there any particular maybe catalyst or risk still that you feel like maybe the market is not paying enough attention to?
Yeah, hi, thanks. Hi, good morning. So, pansin nyo, we're a little bit more bullish, no? And there's a reason for that, no? If you look at what fund managers are thinking, they look at risk and return. They balance risk and return. That's their job. And with the 10 years at giving you 6%, 7%, risk-free, ano pa gagawin mo, di ba? Fund managers just have to put their money there. And it's very hard to get that kind of return, especially during these times, no? You see insurance companies, pension funds, long-term funds, bibilin lang nila na bibilin yan. So the money is there. The funds are going there. Wag mo na risky sa equities, wag mo na yan. Kasi there are a lot of uncertainties eh. Punta ka muna dito sa risk-free. Diba? That continue doing that. So all the funds are concentrated there as of the moment, even up to now. Kaya lang there's a chance that inflation now is going down, and could interest rates go down also. So medyo the question is, where will the catalyst come from? I think the institutions are very under-owned in terms of equities. You talk about foreign, even local. Kasi nga, the interest rates are giving very good yields. The minute they change that strategy, the minute that interest rates go down and suddenly it's below inflation again, wala na namang kikitain sa fixed income, now fund managers will have to shift to riskier assets to get better returns. So that's where the follow-through now will come from. Maybe not yet, because they're still enjoying the high yields. Maganda pa ngayon eh. The bond market is still very attractive at this point. It will take a few more months before that probably the rates will go down. So, nandoon muna concentration. So right now, it's a good time to be in the bond market. And your question on catalyst, that shift now will be your push later on.
Oh, thanks, Sir Marvin. Actually, it's very interesting that you brought that up, because now I want to jump actually to my next overall topic area, which is how do you position now in this type of market? Well, given everything that's been laid out, given this market. So I'm pretty sure a lot of you guys here in the audience came here today because the idea when we go to markets, really, at the end of the day, is to make money. Sometimes it's not really even to be right, really. It's to make money. So I guess for me, my next question for everyone is, we can go one by one here. It's just give me your best idea for this year. So you can give me a sector, asset class, investing theme, or even a specific stock. If you could just only bet on, like, let's say, just one central idea for this year, what would it be? So I'll start with Juanis, then si Boss Neng last.
Thank you. Thank you.
Okay. I tend to follow where I see initial strength. So when the market started to recover, one of the two sectors that was climbing first was consumer-related companies and the financials. And I don't see why there would not be any continuation from those. The only thing is that sometimes they've spiked up a bit, they might need to pull back, and into that pullback, I would like to keep myself in there. So if you guys still have a copy of those two slides where I had those 8 companies that I looked at. So in terms of the banks, I think all the top main banks are there. That's BDO, Metrobank, BDO, BPI, Metrobank. I also included Union Bank in there. And if you were to look at the charts there, all of them have broken out and make preparatory patterns already. And the second lineup of that would be into consumer-related companies. And you'd see the 4 that I have there as well. Robinson's Retail, we have Jollibee, DNL, and even SM. Remember, I'm doing this on the technical front, not on a valuation front. I'll let April handle that. But the patterns are all there, all creating setup patterns for what I believe would be the next move upward. So I would stick with these companies.
All right. Thank you, Juanis. So consumer and banks. What about April?
Yeah, so problema kasi sabi mo isang idea lang. So anyway, I guess the difference for me is that, well, for us fundamentalists, and of course since I'm looking at the risks also, I'm more focused on value. With the market going up the way it has, and of course, with all the risks that's going on, I think it's better to buy, value. Yes, I like banks, I like consumers, and that's something that we actually talked about in previous briefings, and even the mid-year market outlook, I reviewed it, and like, oh, we recommended this already. Pero yun na nga, I think given all the risks that are going on and the sentiment still being a little bit iffy, pag naging mahal na, malamang magkaka-rotation into cheaper ones. So it's better for me if you just buy value. Now, I guess the question is, what about sectors that are lagging? Kasi if you look at my recommended stocks, they are from different sectors, including the most controversial sector right now, which would be, I think, properties, no? It's the most unloved of them all. Why am I recommending property stocks? Well, sa akin lang, kasi niisip ko lang yung mindset ng fund managers. Kasi initially, sige, doon tayo. And mind you, if you talk to fund managers, banks and consumers are the consensus call. Pero the moment that those two sectors become expensive, they won't have a choice. If they're underweight in properties, they'll go there. But I think I would like to add that pag bumili kayo ng property stocks, stick to the larger cap, more active like Kanayala Land, or yung mas may mall-based business, which would be RLC. Okay, so yun important, value and then large cap. And then, sige, properties. Pero mas may consumer tilt ng konti. Kasi at least that is less risky compared to right now, medyo mahina ang residentials and offices. So, which is why we're recommending RLC. And also, it's going to be removed from the PSCI index, which is why it was sold down significantly. So, we feel that it is an opportunity to actually buy it at a very cheap price.
All right. Yeah, thanks, April. Actually, I just have a follow-up question here. So it's great that you brought out your stock picks, because like me, I've actually been wondering. So I've been a COL client since 2007, 2008. So I actually always wonder, when you have that list of the stock picks there, do you actually suggest for our clients to buy all of them? Or can they like just pick and choose what they like? So like let's say for me as a fund manager, one of the things that we do is we try to look for themes for the year which we feel could potentially possibly outperform. So actually just looking at your stock picks, I classified them into particular themes that I see that could actually prevail this year and we could position on. So one is of course China is reopening, the region is reopening, the local market is reopening, and probably that's the reason why you see a lot of foreign costs saying go to emerging markets. And to that end, I see DNL, URC, Jollibee, and GT Cap as exposures for high interest rates and the fact that interest rates can stay higher for longer. Of course, you have the banks there. And then large caps also could be a beneficiary of that foreign flow that we've been talking about. We're saying they're underpositioned. So AC and SM would fall there. And then, of course, if you see that hard landing actually happening in the US, maybe if you want to stay defensive and recession prevails, you go to the ones that pay high dividends like AP, CREIT, and TEL. So I guess just my follow-up question is, do you agree, like let's say with these classifications, and like let's say in your case, like let's say some of our clients here, I understand some are really more active traders and some decide and they want to be a bit more concentrated to really just reap more of the gains rather than being diversified. How would you recommend actually for them to position?
Well, thank you for grouping them. Siguro na lang, well, ideally all, but if you only could, maybe one per theme, no? The China regional and local reopening. But that said, I think there are two themes here. For the consumer, whatever. The first would be just the plain consumers, and for them, siguro Jollibee na lang. Pero kasi DNL I also like because it is a consumer plus a bottom-up pick. So, yun na nga, kung magkatotoo yung sinasabi ng mga tao, it's going to be alpha going forward. Meaning because, why do we say alpha now? Because if central banks will keep interest rates higher for longer because inflation is higher for longer, we won't enjoy the benefit of falling interest rates, giving us the multiple expansion. So that said, companies which are able to generate double-digit above average earnings growth will be the ones who will outperform, and they have to have the sexiest stories out there. And for me, among the four, DNL has the sexiest story. So if only one, I would pick DNL over the others because of the sexy story of, the new plant coming on board, and then of course, the earnings growth implications that would bring, no? If among the four, it would be DNL, then maybe if you don't like DNL, then Jollibee. For the higher interest rates, I would pick Metro Bank, okay, because it's a lot cheaper than BDO. It's trading below book value. And just to say why it's cheap, you think about it, Robinson's Bank was sold above book value. And other, transactions that happened, all above book value. But Metro Bank, one of the big three, below book value. Then finally, they're giving cash dividends. In the past, it's always 1 peso per share. But now, because of the high capital adequacy, all of a sudden they gave high cash dividends the past 2 years, and they most likely will continue to give that. And aside from that, medyo nauna na yung, well, sabagay, umakyat din siya. But of course, BDO and BPI are already there. And again, my view that once the stocks become expensive, there will be a rotation to the cheaper ones. Because medyo uncertain pa yung condition. It's not a buy high, sell higher condition. It's more like buy low, sell high. So baka may rotation tayo sa Metro Bank. And then on the large cap, AC, because SM nauna na. And then on the defensive, well, Actually, yan, gusto ko sila lahat eh. Sorry, pero I like all of them because the power industry, I feel, is really a bottom-up story in the sense na it's not just because of growth, but because there is a hindi naman shortage, but tight power supply situation. Okay, so that's AP for you. They will benefit because they have some supply that they can sell in the wholesale electricity spot market. Then C-REIT, okay. So you have the income. Mataas siya eh. Mataas ang dividend nito. I think in the 7% level. And it's a power REIT. The contract is 20 years. So you don't have the issues with the other property REITs that are potentially going to have issues with the repricing of the rents at a lower rate. No, so a more defensive REIT with a higher yield that yun talaga will benefit if interest rates go down. And then PLDT, well, a bit controversial, non-consensus call because I feel that well, for those who are not aware, syempre, ako mismo nag-model niyan. Kaya alam ko. So, the reason why I like it is because investors are not taking into consideration the positive impact of the tower sales. Kasi in the past, parang inisip ko, bakit ang laki ng capex ng mga telcos considering that the mobile business is a low single-digit growth business? And you spend a lot of money. Ano ibig sabihin nun? For a normal businessman, diba, why are you doing that? Ibig sabihin walang kwentang, diba, that's a money-losing business. Because you keep on improving, but what you're earning is the same, diba? But with the tower sale, okay, they don't have to, the capex is gonna go down. Maybe earlier last year, they didn't share pa that they would reduce the capex, but towards the fourth quarter, they disclosed that the capex will be going down. And maybe that's also the reason why PLDT identified the budget overruns that they did, which people initially thought may nakawan. But the company disclosed that, I guess medyo natakot sila, so they overspent a little bit. They just had too much capex, and they said, we're not gonna spend as much anymore. Which for me, of course, I know our target is 1.7, but I think there's upside risk. And of course, if they need to borrow less and pay down their debts, it's gonna help the profits grow.
All right, great. Yeah, thank you so much, April. So for you guys who are looking at the more concentrated exposure, so DNL, Jollibee, Metrobank, AC, and then all of the defensives are at least April's top calls within our stock picks. So now maybe I could move on to Sir Marvin. So where do you think what's the best bet this year in your opinion?
Best bet. So if you're just going to ask me, for me, diversify in bonds na ako. Bonds ako. For now, bonds. I think with the rates like this, giving you 6-7%, kahit magkamali ka, you still have that coupon eh. Effectively guaranteed, no? And I think I'm showing a slide here how, as you know, COL also distribute funds, bond funds, not just stocks, bond funds. And this is a performance of the bond funds during times when interest rates are going down. As you know, when interest rates go down, bond funds or price of the bonds go up, inverse siya. And these are the experience of these bond funds that we have in our platform. During the global financial crisis, during the inflation surge in 2018, and then 2020 pandemic. And I highlighted there particular bond funds that gave you double-digit returns or decent returns. And my favorite now is actually nung nasa baba is the Manulife Asia Dynamic Bond Fund. And the reason, two things. The Manulife Asia Dynamic Bond Fund is a foreign fund. Kaya lang you can buy it in pesos. You buy it through COL in pesos. So you buy pesos, they convert it into dollars and buy the fund. So you not only get the yield on the fund itself, meron ka pang potential for exchange gain. Nakita nyo kanina yung chart ni Juanis, di ba? The peso is somewhere around 53, 54 today. And we are an importing country. We are, the peso is relatively a fundamentally weak currency because of the deficit that we have fundamentally. No? Medyo trade deficit tayo, we import a lot. So fundamentally speaking, the peso is really weak talaga yan, yung currency relative to the other currencies. And so I put my bet there. Meron ka ng gain on the bond fund itself because when interest rates go down, the price of the bond fund goes up. Plus, meron ka pang foreign exchange gain. The gain that you see here is already the bond fund lang. No? So yun ang favorite ko. Right now, no? It's Manulife. And then my second pick is the Philam Bond Fund. But that's a peso bond fund naman. Kaya lang, that's a fund that has a long duration, meaning it is more sensitive to movements of interest rates. When interest rates go down, that fund goes up. So maganda yung return niya during times when interest rates go down. So yun, those are my ideas.
Thank you, Sir Marvin. So yeah, I think the call definitely makes sense, at least to have some exposure in bonds, given that they act as a good hedge. Like just in case we do see that recessionary type environment, naturally you would think the Fed would pivot, interest rates will likely go down, in which case you could see bond prices go up. And at the same time, correct me sir if I got it correctly, may coupon ka pa that you will earn. All right, so I guess I saved the best for last. Sige boss, ikaw, where are you betting big this year?
Copy-paste pala to. I don't know if you remember when we had the Charles was on Fireside. What is Fireside, Ben? What was the title? It's the worst over. So they asked me. So I explained the reason why I chose SM. So SM at that time was deleted in the MSCI, FTSE. And this was the first time that the group of April, the research, came out with a buy recommendation of SM. It was 780, somewhere there now. It's rallied so much now. So I'm always a guy that's what we call an all-in. When I see opportunities, nag-all-in talaga ko dyan. Just to summarize who I am, basically I'm what we call the value momentum trader or investor. Now, so when markets are expensive, I wear my active trading hat. In other words, I go in and out of the market. So that holds globally. When I see values, when I see a lot of this rebalancing happening, deletion, additions, and really I take a lot of advantage towards that. So let's say, for example, if I think the latest is I think last year it was GD Cap, then Security Bank, then we have what they call now Mega Road, RLC. They're selling at a huge discount wherein most of the passive funds are getting out. Then we look at that as an opportunity. So Robinson's before it rallied, so we were looking at it. But of course, when everything is expensive, I will also, if I want to be participating without timing the market, and I gave that talk also last year, is that we teach this every time. It's called by Aswat Damodaran. I share this all the time. I look at the corporate life cycle of each company. So from a startup to a young growth, high growth, mature, declining. So anytime I visit a company, I just ask them, okay, can you fill up? Let's say I meet a company that wants to list their company. I just ask them, so check mo lang, saan ka ba? Is it mature? Is it young growth? Is it high growth ka? So it's a matrix. You can watch it in YouTube for free by Aswat Damodaran. So let's say, for example, if I want to put an all-in, I'm wearing investing in businesses, because the problem is the last few months when I give a talk outside Metro Manila, I will, especially the newbies, I will always talk about investing in businesses, not investing in the stock market anymore. Kasi 10 years, hindi na umakit ang market natin. Kaya I have to explain that you need to be investing in businesses. So yun ang naging mantra namin. No? I go out and when I have identified a company that I like, I will wear my investing hat na. Passive investing. Wala nang maiisipin. So, yung sinabi ni April, yun ang ginawa ko. So, I just continue to accumulate DNL. Right? With the Batangas opening, na-delay, pero hopefully by second or third quarter, umpisa na. So, when you're seeing double-digit EPS coming in, hindi ko naisipin yan. Accumulate, and then I get the dividend, 3-4%, di ba? Can you imagine? I think DNL during the height of when interest rates are low, it was what, 25, 30 times PE. Today, by 2024, it's going to be 10 times PE. So it's really a no-brainer. No, it's really a no, well, by the way, there's no guarantee. Only debt and taxes now. Investing, wala yan. But when you wear that kind of a hat, and I teach this also, we talk about the 4 Ps, people, product, potential, predictability. So I classify DNL as a parang high growth. Hindi pa sa mature growth. Nag-uumpisa lang siya. Well, hindi man nag-uumpisa. I've been there for 50 plus years na. Pero that's how I look at it. So, di ko naiisip yan. So, but then of course, when there's opportunities, like what's happening today, a lot of rebalancing play, MSCI, PSEI, FTSE, whenever I see capitulation on good companies, you have to remember, hindi yung basura, on good companies. And you're seeing a lot of this. When they are capitulating, please wear the investing hat, right? Wear the investing hat. When they're being deleted and then all the fund managers are getting out. And the nice thing about this is because the Philippines is inefficient. Inefficient yan, ha? So when it's inefficient, you will see people are selling at a huge discount. And we will wear that investing hat now. So I trade what I think. You have to do your numbers. That's the reason why April is here all the time to help us to identify these companies. So that's how we outperform. So wearing a trading hat, like Juanis is his trading hat, so you see strong issues, then you see the potential of buying it, breaking out or buying at pullback. No? And then the hat that which I need to wear 2 hats. One is a trading hat, and then one is also the investing hat, the active investing hat. And then, if I like a company, wala na. I'll just invest in a business, which I think that will continue to generate cash, right, over the next 3 to 5 years. And hawakan ko na yan. But then yun, parang investing hat, passive investing talaga yan.
All right. Great. Thank you, boss. So I think that was really more of a process that Boss Edward undergoes through in terms of like selecting that big bet. So you want something that's really fundamentally secure, stable, and then you look for situational opportunities where it gets sold down irrationally, and you try to pick it up.
So that just to add, when you're doing you have to remember the Philippines is most of our companies are mature growth companies yan, diba? So pag binebentahan yan, you have to wear your investing hat talaga. It's called active investing. Walang cut loss yan. Kasi in the case of let's say for example, we wear also an active trading hat wherein we trade on setups. No? That's totally different. That's why we don't teach that. Kasi the Philippines is mature growth, mature businesses yan eh. So when you're seeing mature growth businesses being sold down because of a temporary challenge in the quarter or 2 quarters, then you have to wear your investing hat. After the capitulation, kailangan nandun ka. Kasi if you don't pag hahabol ka ng presyo, the Philippines is more of a what we call a swing trading. No? Kailangan buy low, sell high. Hindi yung buy high, sell higher. Especially when markets are overbought. You don't want to be buying, chasing prices. Diba? The sad part with, I hope that this crowd that are here have learned it already, that you need to wear a hat that you understand the companies that you're participating, and then wear the hat of a value investor talaga, no? Swing trading talaga. Yeah.
All right. Yeah, thank you, boss. Okay, so at least in the interest of time, I would actually now want to go into, at least a topic area when we can give portfolio advice to our clients. So the way I did it here is just I classified, like let's say a certain situation our clients might find themselves in terms of their portfolio. And then I would just like the panel to give general advice as to how they could improve their current situation. So yeah, if we could flash the first one. What should a client who's been left behind by the current rally do? So like maybe I can start with boss here also. So for example, I would guess maybe you didn't think the market was going to go up at the start of the year, and you end up right now you still have a lot of cash. You find yourself in that situation. What should you do right now, boss?
The last time, SM, ngayon, DNL. Hindi na iisip yan. I'm not, disclaimer lang, I'm not part of the Lau family. I'm a Lee, not the Lau family.
All right.
No, I wear the investing hat. That's what I'm saying. I'm wearing an investing hat. And because of the growth, the building of the Batangas plant, so it's a good growth story. Make good growth story.
All right.
And then they pay you 3-4% cash dividend. So in other words, they're paying you to wait for the growth, diba? So that's how we position ourselves.
All right. Thanks, boss. Okay, what about a client who has a portfolio that's lagging naman the gain of the market? So they might be fully invested, but a lot of their stock picks, these could be good names, but they're laggards, meaning they're not moving as fast as the market in general. I mean, how would you suggest? Do they just hold and wait for at least hopefully the fair values to mature in the stocks that they're holding, or would you ask them to switch? April, maybe I could throw that to you.
Siyempre sabihin ko, just be patient. Di ba? Because of course, you want value. But that said, okay, maybe, assuming that you are heavily invested in, say, properties, like lahat property, maybe you can diversify. Switch from a cheap property name to, a cheap banking and a cheap consumer, yung ganon. So may diversify also if you are too concentrated in one sector, so that at least it's more spread out. But again, look for the value names if you diversify.
All right. Sabi naman ni Warren Buffett, the market is an mechanism to transfer money from the impatient to the patient. Sige. Oh, what about Juanis? So what if, like, people in the audience here, they're holding their portfolio, they're already ahead of the market this year. For example, the market's up 8%. They're doing somewhere like 10 or 12. So what do you suggest they do? Do they just sell na lang muna and sit back? So what do you think?
Ako ba yung impatient? Well, as a market timer, I think I want to see where we can efficiently deploy money to where it can make money, right? And so when you're in a situation where especially if prices are overbought, there's a chance that profits that you've already made can deteriorate. So top slicing is clearly the situation that you have to do first. Try to be able to keep the profit that you have. At the same time, when that market attempts to come down, it's important that you have a big view of the market because your mind might not be mentally prepared to buy back. Earlier, I was talking with the gentleman here. Another task that you might feel is a problem is, let's say, for example, I bought a certain stock, let's say BDO. It went up so much. You took some profits. Now, on that profit, it's just going sideways. We don't know whether it's going to go all the way down or lilipad ulit ba or ano. And what do you do if, let's say, it continues and you've just taken your profit? So it puts you in a situation to wonder what you're going to do. So if my mindset on the big picture says we are in a recovery phase, so what does that mean? That means if I'm going to take my profit, I'm not selling my entire portfolio, right? So just in case we do see an extension of the rally, I can still make a generous amount into that profit. And then what I would do is I'll do the top slice. If I missed out on the next one, never mind. I'll wait for the next correction to happen. I still have a core position that will make money anyway. And if I do see the correction, please don't get scared. Naman, finally, it corrects. And now you're going to say, ano ba, akyat na ba ito? Mahuhulog na naman. So you're playing a game here where you're supposed to be prepared to buy back. So when it finally hits those levels, you said, oh, I want to buy it back here and here. Put your check mark and go ahead and take it. And that's the way you should be. So plan out your trades and then execute your plan.
Juanis, what if it's a portfolio that's super stuck? Meaning, like, let's say, maybe over the past 2 years, it's really the speculative names that was participated on. Then, of course, right now, they couldn't recover. Would you suggest, like, let's say, clients, like, maybe just cut loss on some of the more speculative issues and then just shift it to the ones that look better?
I've done that so many times, but honestly, in my last so many years, I don't get stuck, right? And I don't get stuck because it is my activity as a trader that if prices go below a certain point, I'm out, whatever name you be, Right? Unfortunately, boss, hindi ako yung wala ng cut loss na yan. Ako, naka-cut loss ako. So, and when I see the opportunity to move, I move. Now, for those people who are stuck, you have to ask yourself a serious question. Use what she told you earlier. Is there really substance in that issue you're holding? Or were you just praying that one day something will happen? Because if you are, then you might as well look for the potential switch. Look for something more viable that can probably recover faster than you being praying all the time. And take active control of your resuscitation. All right? So I'm not gonna say names of stocks, okay, because I don't wanna do that. But if you are and you think that there's been no elevating movements in your portfolio, please consider switching. There are much more valuable issues that you can do that will stim your recovery faster than just holding on to that for a very long time.
All right, great. Thanks, Sir Juanis. So maybe it's time for us to be brave and bite the bullet, then hanap ng mas maganda. Sige. Maybe the last. How about for somebody who's uninvested? Maybe the audience would like to maybe convince some of your family members or friends to get into the market. I mean, Sir Marvin, as our fund management expert. Uninvested. Wala pang posisyon.
Wala pang posisyon.
Ako, gusto itago yung pera sa ilalim ng kama. Ano po?
If you're here, buti na lang you're here. If you're still uninvested, the biggest risk, I think, is not taking risk. So parang with the inflation of 8%, our Philippine inflation is 8%. It's so hard for you for your money to catch that. So make your money work right away. Whether it's the pick of April, Boss Edward or Juanis. Juanis tells you the timing. Si April tells us the fundamentals na, di ba? So nandiyan na yan eh. And I suggested bonds. So you can diversify already your portfolio. So get the balance of all, but make it work. So for uninvested, I suggest you continue attending sessions like this and try to learn more and start investing already. Whether it's wait for the timing, right timing, get the good stocks when it goes down, and participate in the bonds.
All right, great. Thanks, sir.
I have one comment.
Go ahead, boss.
I was with Johnny kanina. So for senior age like us, and you have never participated in investing in the stock market, and you meet a fund manager who basically recommend buying a 6.5%-7% bond, right? I think that's the right thing to do. Kasi when I give a seminar, there's a, sir, 50 years old na ako, anong gagawin ko? So may technique kami, kinausap ko na si Marvin Fausto. Sabi ko, ganito na, sabi mo sa kanya, mag-invest siya ng bonds, yung kinikita niya, 50% goes to equities. Kasi pag bumaba ang interest rates, lilipad itong stock market. So, it's a balance, right? You understand? Meaning, the coupon that you get, then you invest it in the stock market para, di ba, naka-isolate ka. You still have your 50% or 70% panggastos mo, but at the same time, you're exposed in the stock market. And once he understands how to do it, automatically, then he'll start investing more. No? As interest rates come down, and then the sad part is when interest rates come down, umakit na yung stock market, tapos, di ba, hahabol ka sa taas eh. So, at least konti lang. Set aside 10-20% and just start this portfolio. Nasa equities naman.
Okay, great.
Hindi mo sinabi, kaya sinabi ko na.
Thank you. Sige, so I guess before we actually go on break, so just to update you guys in terms of where we are in the program. So the first half is really this Q&A where I was the one asking questions. The next portion is the more exciting one wherein we're gonna ask you guys, the audience, to ask your questions to our group of panelists here. So we're going to break in a while, but maybe, I guess, before that, just so that we could fit this in. So, si Boss Marvin is heading our asset management group, of course, which I am also a part of. And I think it was Ray Dalio who said it. I mean, not who said it, but he's the one who maybe popularized the idea of having an all-weather fund. So he manages Bridgewater Associates, the largest asset manager in the world. And of course, the concept behind an all-weather fund is to have a general asset allocation that umulan, bumagyo, whatever the season is, but that asset allocation is something that you could sleep soundly with, and it's gonna help you accomplish your goals at the end of the day. So I guess for this segment, before we go on break, I just want Sir Marvin maybe to just tackle what is your recommended overall asset allocation. I mean, for our clients in general. So,
Yeah, thank you for that. I prepared the slide. This is not all weather, no. I mean, there has to be some tactical movement also, which we guide you naman on a regular basis. So if I prepared something here, no, it really depends on your risk appetite. You can just choose which one. If you're aggressive, moderate, or conservative investor. I consider myself as an aggressive investor. Kahit na medyo senior na rin tayo. I still want to invest in the stock market. But I balance the portfolio. If some of you were following me before, like we had something like this mid-year last year, no, July. We were more on, we had a lot more money market at that time. I think if you are a conservative investor, I was saying 50% ka money market muna. But now, if you're a conservative investor, babaan mo na yung money market mo, add more on the bond fund, but still maintain your equity portfolio, 80-20 return, 80-20 mix. If you're moderate, 70-30 mix. And then if you're an aggressive investor, 60-40 mix. I added the target return on the bottom just to give you an idea what I think will happen probably this year or for the coming years. What could be the potential return of that kind of a portfolio? So, syempre, if you're a conservative, which is on the right side, mga 3.5 to about 7.5% return. That depends on the return of the money market, which is about 1 to 2.5%. The expected return on the bond fund is about 3 to 8%. Given you the 3% you can say is the more or less the average coupon, and then to the 8% if interest rates go down, you get a capital gain. Now and I mix also foreign and local bond funds. For the equities naman, I still maintain equities. You can buy equity funds, like of course we have a COL equity index fund, and then some stocks that April and Juanis recommends. Now in the foreign, we have also foreign funds. If you want to participate in the foreign funds, we also distribute global equity index funds, which is the Sun Life World Equity Index Fund. It's invested around the world. So it's no-brainer na yun. You buy pesos, you use pesos pala, and then they convert it into dollars, you buy global stocks, global index funds. So no-brainer na yun. You can get the return on the equity fund, and then you have the exchange gain pa. So this is more or less what I like in terms of asset allocation, what we tell our customers. No, this is generally the asset allocation we'd like to present, so that you have more a balanced portfolio, not just equities, not just bond, but a mix of all. Thanks.
All right. Thank you, sir. So at least, depending on how you classify yourself, moderate, aggressive, or conservative, those are recommended overall asset allocations. So with that, I think we could go on a 10-minute break, and then afterwards, we'll go on with the floor Q&A. So yeah, I'll see you in a while.